Hey everyone, Brian Whitmer here with a new issue of the European Financial Forecast. So June wasn't the most exciting month in terms of price action. There is a lot of cool stuff going on behind the scenes. One thing is a pattern that we showed. It was right after, a couple weeks after the lows last October in the Stoxx 600. I just kind of laid out what I was thinking in terms of the size of the rally. And I have to say, it's been fun to track these waves in real time. Prices are hitting all their marks. The waves are clear. And I'm going to update that. I'm going to show the original chart and I'm going to update it because if this pattern plays out as we expect, there's some pretty big implications for all of the important markets in the Eurozone. And don't worry if you're a new subscriber, I'm going to lay out exactly what we were looking at back then and more important, obviously, what to look out for as we go into summer. Now, obviously, DAX made a new all-time high. Lots of excitement as expected. I'm reading, pundits talking about how Europe's just crushing the US, right? The luxury sector's just ripping higher. I do think this excitement is misplaced, and that's probably even a charitable description. With the DAX specifically, that new all-time high, it is a little misleading because the DAX is total return. I'm going to show you three other indexes in Germany. I almost never see these in the financial press, and that's a shame because they do paint a more complete picture of Germany. And the picture they're putting out there, the message they're sending is at odds with these bullish narratives that frankly always pop up when the DAX makes a new all-time high. So we're just going to kind of sift through the noise this month and try to get a more complete picture of what's going on. Now, there's a ton of interesting things going on with rates and bond spreads. We've got, money supply now. M2 is collapsing both in Europe and the United States. We've got inverted yield curves, obviously. The 210s now in Germany are the most inverted since I think like 1992. The big feeling I'm seeing is kind of relief. Like we've finally gotten out in front of the inflation problem. I kind of share that view. I mean, inflation it's a scourge and it comes from having no standard of real money. I do disagree with the idea that, central banks have somehow gotten out in front of the inflation problem. I also think that things could turn south here pretty quick. I mean, inflation is bad, but deflation is on a whole other level. And I still think it's something that should very much be on everyone's radar. So I'm going to show some charts. The commodity markets are really invaluable here. I'm going to show some charts and just kind of weigh in, take a deeper dive on the inflation deflation debate because I really think that getting this question right is going to be important in the years ahead. So have a look, have a read, enjoy the issue, and hit me up with any questions, comments, and see you again soon.